Glad you're streaming with us. Interest starts accruing again today after a 3-year pause on federal student loan payments. This milestone comes just 1 month ahead of when loan payments actually restart. For more, let's bring in our Elizabeth Schulze, who's been breaking it down for us. What should borrowers expect to see today, Elizabeth, with their student loans?
Well, Kira, I've been talking to some borrowers who have logged into their accounts, and what they are seeing for the first time in more than 3 years is that balance of their student loans is going to start to go up because they are once again being charged interest. So we have seen that over the past 3+ years, since March 2020, borrowing costs have been at 0%. This was part of the broader pandemic relief program to try to provide relief for Americans with student debt. What we saw now is that your interest rate that you were charged pre-March 2020 applies again. So if you go and actually look at your account, you're going to be starting to accumulate that interest. Now, importantly, that payment could be going up. You don't actually have to make that payment now until next month. Payments are going to resume in October, and that date will vary depending on what loan servicer you use. But this is a really important time to kind of be taking stock. You know, we've seen this massive freeze in the student loan market. This affects more than 43 million Americans with federal student loan debt. And for the first time, that number is going to start accumulating, and that debt is going to be due in the next month. Kira.
So is there a way for borrowers to negotiate their interest rate?
Right. So you can always talk to your loan provider, try to get a lower rate. It can help to try to shop around. And it is important that there are some programs out there that have been rolled out either by the administration or by providers that are aware of the kind of massive changes about to take place over 3 years. I do think it is important to take this moment just to highlight just how much of an impact interest can have. If you get behind on those payments, this really does add up. So if you look at, for example, the average student loan balance in the U.S. is around $38,000 at an average rate of about 5.5%. You will pay over the life of that loan about $25,000. So one of the kind of tips that various financial advisors have been telling me is that now if you can make even a minimum payment after not having made payments over the past 3 years, it's a really good time to try to not get behind on that interest because that can set so many people back as time does go on.
So what happens if you still can't pay come October?
Right. So the good news is there is a little bit of a grace period here, at least for some of those federal student loans. So the administration is taking a 12-month period to say if you are late, if you're behind on payments, if you miss something, you're not going to be held delinquent. You're not going to be you're going to have a little bit of time to catch up. That does not mean that interest stops going up. So even if you don't make the payment, you're not going to be held delinquent. You are still going to see the number go up. So there's a little bit of trade-off there where you're not kind of just free for the next 12 months, but trying to give a little bit of leniency in light of the fact that, Kira, so many people were hoping to get a much bigger chunk of debt cancellation. That's something that they had been, a lot of borrowers we've talked to have been banking on, and they're seeing the options out there right now, and they're recognizing that at the end of the day, they will have to pay those loans, whether it's now or down the line.
So then what else is the administration going to do now for borrowers after the Supreme Court struck down the president's student debt cancellation plan?
And that was such a blow for the administration, right, Kara? We saw President Biden really go out and tout this plan that would cancel up to $20,000 in student loan debt for borrowers. And we saw the Supreme Court say that he couldn't do that. And so there is this kind of other effort to see if there are ways to do a broader cancellation plan. But President Biden himself has acknowledged that that could take some time. So in the meantime, the administration has rolled out a new plan called SAVE, that it's basically it's going to try to lower your monthly costs based on your income, an income-driven payment program. And this is something that borrowers, they are encouraging to look into to see if you can qualify for this, if it lowers your monthly payment. Something that the Education Department is saying they're taking this step. They've also done a couple other corrective measures. About 800,000 borrowers who had been part of these IDR, interest-driven repayment programs, over the past decade, who should have had their debt forgiven and did actually get their debt canceled. But of course, 800,000, not a lot compared to the more than 40 million people who have that debt outstanding. The administration making a point to say we are doing what we can. We hope to do more. Go to the Department of Education's website, see if you can qualify for some of these new programs that we are rolling out right now.
Elizabeth Schulze, a lot to think about. Thank you so much. Great to see you. Happy weekend.
Happy weekend, Kira.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.